good morning, everyone. Welcome to the live stream today. It's about 10 o'clock in the morning. It's the 30th of December, 2020. This might be my last video of the year, so I'd like to wish you all a happy new year. I hope you've been having a really good holiday season. We've been having some ups and downs here in the last couple weeks. A little bit of choppy waters, but what I want to kind of focus on today, I want to focus on the dollar index and how the stimulus kind of impacts this, and then also discussing a little bit of kind of fundamentals behind what happens when we print money. Of course, before I get into any of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research. I'm just giving my opinion on the market, and also just to take the time right now to reiterate that we have a Discord server where we do a lot of collaboration. I focus a lot on education. We've done some Elliott Wave classes. We've kind of discussed my future plans for Fibonacci and some other things that I use when I do my trading. And of course, you all can see my history on here. You can see that I'm not new, and I've been around for a while. And I do manage my risk. And so anyway, enough of that. If you'd like to have access to the Discord, there's a link that's right here on the screen. You can scan the QR code, or you can type in the URL to get access to our Discord server. So without further ado, I think we should go ahead and take a look at the charts and see what we've got going on over there. All right, so I'm looking at the dollar index on a weekly, and basically starting from the bottom in 2008. And from here, you can see that we've got a nice impulsive move, a 1, a 2, and then a 3. I think this 3 was pretty clear that this finished a move. And just kind of putting this on here, from the bottom, you can see we've got a 1, 2, 3, 4, 5 into the 1, A, B, C into the 2, and then a nice 1, 2, 3, 4, 5 into the 3, A, B, C into the 4, and then of course a finishing move 1, 2, 3, 4, 5 to finish that move. Okay, I know that there's a lot going on this chart, so I apologize ahead of time, but basically all I really did here is I took my trend-based Fibonacci tool and I started down here at the bottom, worked my way up, did my pullback, then we look for our high probability target for wave 3, which is the 1618. And just look at my crosshair and look to the right and see where we topped out right here. I mean, it was really perfect. It was really great. So now I believe we are in the middle of a complex 4. All right. So I think we're in the middle of a complex 4. So we've got a 1, 2, 3. And then we've got this guy down here. So the only thing that I don't like about this is the fact that we are violating the highs from this wave 1 that I'm projecting here. Which leads me to believe that we could potentially have much further down to go, maybe as far as 85, which I could see that. But I'm going to drill in a little bit deeper. Again, I'm on a weekly time frame here. But as the dollar index falls, stocks tend to go up, okay? Because stocks don't go up just because a company is worth more. Stocks can go up because the dollar is worth less. Not to be confused with worthless. But when the dollar index falls, it means that it is not as strong compared to other international currencies. And when that happens, prices inflate. Stock prices inflate, milk prices inflate, gas prices inflate. When your dollar is worth less, other things cost more. And yes, dollar for dollar, businesses appear to be worth more, but what people fail to kind of put into perspective is the fact that your dollar is worth less than it was before the inflation occurred. We have more money that got printed in 2020 than we have in almost the entire history on a year-to-year basis. Yeah, I would say, I think it was, I was looking at some statistics, and I think it was like 20 to 30% of all of the US dollars in circulation were generated this year. And we are about to do that again, right? We have a new stimulus. Checks and wires have already started coming out of the Treasury, so even more money is being printed as we speak. This is going to cause the US dollar to be worth less compared to other international currencies. Okay, so as this goes down, and you can see we've had this target here for quite some time now, down here at 88, 88 to 87.5. That's where the index, I believe, is probably going to fall to. I think we're going to find ourselves down there. Now let me go to a daily time frame. Let's take a look at this on a daily. All right, so we're going to get the top here to the bottom. We do the pullback. Okay, so I've got two different things going on here. I've got a pitchfork, and you know, on a pullback like this, we would expect this to go down to the median, and it looks like we're flirting with it right now. So are stocks topped out? Maybe. I still think that we find ourselves down here. You know, if things get really bad, we're going to come down here to this 1, 2, 3, 6, and we're probably going to come to a lower diagonal on this pitchfork. I'm less concerned with the pitchfork, right? So let me just kind of remove the pitchfork because I'm less concerned about it than I am about this potential correction here, okay? Because when I look at this, it looks like, well, at a minimum, it looks like we want to come down here to the 100 because we passed the 618. All right, we passed the 618 back in late July. And look at this down here. Remember, we had a rally, we had a corrective move that happened in the stock market on Labor Day. And look at what happened. The dollar index temporarily bottomed. We had a correction. We're going to dive in and take a look at that. But now we are coming down. I still think we're going to come down here to 88, okay? So let's go down to a 4-hour time frame because I want to focus on the top, okay? Let me just make sure that I've got this from up here, okay? Let's just zoom in, just make sure we've got this. All right, I always look for corrections, okay? And I see a correction right here, a nice A, B, C, a nice correction right there. Nice correction. And let's just check the technical move there. We came back to the 50 almost perfectly, which is ideal for a wave 2. Okay, so let's do this. From up here, looks to me like we've got a 1, 2, and then we've got a 1, 2, 3, 4, 5 to finish this 3, excuse me. A, B, C, finish that 4, 1, 2, 3, working on the 3, maybe we get a bounce, then we fall, we hit that 5, okay? So I'm going to go to an hourly here and just kind of show you this correction that I have already outlined. This is actually an old chart that I kept. All right, let's look at this for just a second because this is perfect. If you want to learn anything about Elliott Wave, you need to listen to what I'm saying right now. Okay, what we had an A, B, C, you know, an impulsive move up. We had a pullback, A, B, C, correction. This is a correction, A, B, C. If it looks like chop, it's a correction. So we take that trending move up, we pull back. All right, so we pull back. Maybe we stop here, maybe we stop down here. One way or another, we were hitting an upside target up here at the 100. You could see it moving around as I'm moving this around. You see that? That 100 is what we were eyeing, and it hit it. It hit it, okay? Then what did we have? Off of this C, again, another trending move up, a little pullback. Let's just wiggle this guy around. This is what created that green box, the 100 to the 123.6. We stopped right in the middle of it, and we completely rejected. This is a completed correction, which is why I'm calling that the completion of wave 4. All right. So again, let's drill back up. Let's go to a 3-hour here. Let's go to a 3-hour because what we now need to identify is where's wave 5 going to end? All right, where is wave 5 going to end? What I'm going to do a couple different things here just to try and give myself some kind of a high probability target for wave 5. I'm going to measure this wave 2 down here to wave 3, right there. Okay, we did not quite make it to the 382, which is a sign of weakness. Okay, high probability target for a wave 4 is going to be here at the 382. I'm going to remove all of these. We've discussed them. All right, I don't need to keep the garbage on the chart. Now that we know why this box, which actually should be red, let's change this color to red because I think that makes more sense. Now that we hit that high probability target, and again, the whole reason why I'm doing this, just to reiterate for anybody that just joined, I'm doing this because I need to identify when stocks are going to top out. When do I think stocks are going to top out? That's the whole reason why I'm doing this. So, sign of weakness, measure wave 2 to wave 3. So we're measuring wave 3. Pullback didn't quite make it to the 382, that's a sign of weakness. I'm looking for that negative 236. So let me throw that negative 236 on here. Let's just see where it's at. Negative 236 is actually right where we're at right now. And we are pushing below the negative 236. All right, sign of weakness. Let's put the negative 382 on here. Where's the negative 382? Right down at basically where we are, where we're looking. Between 87.5 and 88, this is where I think we're going to end. Okay, so we've got that on there. Let's keep this guy on here for right now, because again, what I can see here on a subdivided level from up here, we've got a 1, 2, 1, 2, 3, 4, 3, 4, working on the 5 on a lower degree, and we'll change the color for contrast. All right. So again, I think we're finishing this move. I think we're working on finishing this. There's going to be bumps along the way. There's no doubt there's going to be bumps along the way. But I would say we're probably going to keep going up until January 15th. When that enormous amount of open interest expires, it's probably when we are going to take a turn to the upside. All right. But this looks good. I mean, this looks really good if you're holding stocks. If you're holding shorts, it doesn't look quite so good. Let's just measure wave 3 again here. All right, again, did not quite make it to the 382. Downside target, there's 88.5. Here's the negative 382 if it is weak, 87.9. This zone right down here is where I will completely cash out, and I'll just wait because it doesn't hurt to wait. I'm not saying I'm going short. I'm saying that I'll cash out and I'll wait, because if I'm wrong and this keeps going down and stocks keep going up, there's 1,000 different opportunities every day that you can take to make a trade. I'm not going to sweat over it, but once we get down here, this is where I'm going to be cashing out. I'm not going to be losing money by cashing out. I just might miss some opportunities to make money. There's a big difference between the two. I don't always have to be in a position, and nor am I always in a position. But anyway, this isn't the time nor place to lecture about positions. At any rate, I believe that we're probably going to see the dollar continue to fall as the money starts to print. And we'll see what happens when we get down here to this red box. I think it's going to happen. I think we're going to get there. And when that happens, then we'll discuss what stocks are going to do. But I believe that stocks will probably top out right here. Of course, you're going to have winners. As the stock market goes down, that doesn't mean everything goes down. Money could be rotating into other things and causing microcaps to start to rise. But I would be really interested to see what the mega caps are going to be doing at that point in time. But anyway, this is my impromptu Elliott Wave analysis. The only thing that I had on this chart, just in case you're just joining, the only thing I had on this chart to begin was just this correction. And then what I did from there is identified another correction, right? I like to identify corrections and then go from there. Once I identify corrections, then I can figure out what the impulses look like. So, that's, my opinion, that's the best thing that you can do. You look for corrections, A, B, C, find your corrections, and then you can identify the impulses off of that, and then you get a better idea what the wave count is. Then you can make a more educated guess on what your high probability trade is going to be, because that's all trading is. It's a game of probability. It is not a game of certainty. Nothing is 100%. You will have losers. You will have losers, no doubt about that. You're going to lose on trades, but find your high probability setups, get in, get out if you need to. Don't be afraid to cut a trade. That should be my new motto. Don't be afraid to cut a trade. Anyway, um, all right. Well, hey, thanks for watching. And of course, we do want you to like, subscribe, share, and all of that on YouTube if you found this video helpful in any way, shape, or form. And of course, we'd like to have you inside of our Discord server. If you just kind of go back to the very beginning of the video, there's a link there for you. And of course, wherever you are in the world, I hope you're having a good